I sent a request, but
Albert.
yes, unable to send a request because the host is recording.
Hey. I'm recording it yet. Let me see what I can do.
Hello, Ike.
Yes.
Please, this calculation, is it working for the thereafter?
Yes, we work just one thing, and then that is all for thereafter, right?
Okay, so
we working for month 5, and then that is all. Month 6 will maintain the same figure as 77. Albert, I've made you a co-host, so try.
Yeah, I can see it's recording now.
Okay.
Ike, please,
Yes.
we have to prepare the sales budget, right? And then the sales budget has to do with the sales in units times the selling price, right?
Yes, please.
Okay, so ideally for the first 4 months, it's going to be 18,000 units times 70, right?
Yes.
Okay, so 1, 2, 3, 4. So the 10% increments starts with August, right?
Yes.
Okay. I think I get it now.
Isaac, please, can you resend the question to the group?
Oh, this question was sent to the group last week. It's the first question. Check, it's there. Check, just check. It's a very huge document, and then sending it back and forth will be a bit disturbing. But just check, cross-check from the page. It's there. I've labeled it past questions.
Yes,
Right.
it's there.
It's there. You should be able to find it. Okay. So we're trying to find the selling price here. The policy is that the organization increase its price further by 10% thereafter. So we're saying that for us to know the selling price here, it's supposed to be 1.1 times 70, and that gives us 77. In other workings, you were saying that it's 10% multiplied by 70 cedis plus 70 cedis. Plus 70 cedis. Okay, so 10% multiplied by 70 cedis plus 70 cedis, right? That would also give us 77 cedis. Fatia want to go the long way to say that 10% is just like 10 divided by 100 times 70 in bracket added to 70, right? Fatia, so your answer is 77, but that's a long way, right? That's a long way. Yeah. The person who did 1.1 times 70 is far gone. You are now coming to enter a lot of items. Okay. Then my interpretation is that because of the word thereafter, it means September to the selling price will be 77. September, the selling price will be 77.
Yes, that was exactly my point.
Right. Okay. Great. But I'm saying that the conversation may change a little if the thereafter wasn't there. And then they said that it increased the price further by 10% month on month. Then you'd have kept on with the workings. You would work out the September selling price also. Right. But that's not a conversation. So we stop there. Okay. So let's see. We we can multiply the sales unit with the selling price to generate the sales values. Sales values. Right. So this is it. 8,000 times 70 cedis. And then I'm going to do this for the rest of the month. For each month, I would multiply the sales unit by its selling price. Each month, we're multiplying the sales unit by its selling price. So that's what we could get here. All right. Then I'll add from April, May, June, July, August, and September. I'll add the totals together here to become my total sales value. Well, maybe I can highlight it a bit to distinguish it from all the other items. Okay. Is there any question on the sales budget? It's the easiest. It's the easiest. So if there's a question, I'll pick it. If there's no question, then we continue. All right. I understand you all understand. All right. So let's look at the next sections of the question. All right, Fatia, will you continue?
Yes, sir.
Yes, Isaac.
Okay, yes,
Yes.
All right. So these figures are based on orders that customers have already placed with the company after considerable hard work by the sales team. In order to secure the orders, the sales team had to negotiate payment terms with the customers. Only 10% of customers agreed to pay immediately for the product. Of the remaining customers,
Are you there?
know that 2% of credit customers never Okay.
But yeah, we're not hearing you. Yes.
Hello.
Yeah, continue. I can hear you.
Network, sorry. So, okay, within the industry, it is known that 2% of credit customers never pay into bracket because this within the industry, 2% of never pay into brackets because they go out 70 cedis per unit in the first 4 months, April to July, and increase it further by 10% thereafter. The firm's cost of production for a unit of item is as follows: direct material 17 cedis, direct labor 21 cedis, production overheads 12 cedis. Should I stop here?
The way you are suffering in this, I have to let you stop. Let me continue from there.
Okay.
Okay. So we've been given some cost unit, right? Cost of production, some elements here to consider, right? Remember we said that if you have to prepare your production budget, you need your sales unit. That's the first thing that you consider. You may have to consider ending stock. And then other things that may follow would have to be your opening stock and then cost element, cost of production. And then we said some cost element will be direct material, direct labor, production overhead. And then they're giving them here. So be mindful of them. It continues to talk about other policies that you have to pick on. Wages will be paid for as they are incurred, whereas production overhead incurred are paid for a month later. right? Suppliers grant a month credit for 50% of each month's purchase, and then a remainder is paid in the month of purchase. The next paragraph says that the inventory policy of the firm in relation to finished goods and input are as follows. Inventory or stock of finished goods at the end of each month is 15% of planned sale for that month. For that month, 15% of planned sale for that month. Stock of finished goods at the end of each month is 15% of planned sale for that month. You may have to really pay attention to this guy. The ending at the end of each month is 15% of planned sale of that month. This is all what we are looking for as the ending stock policy. The ending stock policy. You remember, ending stock policy. I said ending stock is strictly guided by policy. So this is the policy that we are trying to look for. This is the policy that we are trying to look for. Right. Whereas that of input will remain unchanged during the plan period. So for the plan period, input will remain unchanged. So constant. Raw material budget will not be prepared because of this restriction, right? If you have your budget, you have your items held constant, it means you don't need to worry your head, right? You don't need to worry your head in preparation of a budget. So for raw material, we are not going to prepare a budget for raw material. But let's pick on this policy to see if we can do something with that in the production budget. Okay. I'll come back to read the rest of the sections to us. But let's see if we can prepare the production budget. The production budget. It's about 10 marks. That's going to fetch you about 10 marks. So let's see if we can prepare the production budget. Remember that if we are preparing the production budget, there are some key elements that we look out for. The first thing that we look out for is the sales unit. And then we said the sales unit, you are going to pick it from the sales budget. You're going to pick it from the sales budget. And then we've also seen the policy on ending stock. We said that this ending stock will become the starting stock. So it's very easy to prepare the production budget. Very easy, but still a bit disturbing. If you are not paying attention to me, then you would get it confused. Sales unit, this sales unit, we are going to bring it down here. We have a policy to guide us on how to calculate the ending stock. After you've computed the ending stock, this ending stock would help us or will become the starting stock, right? Ending stock of period 1. So ending stock of, in this context, April, will become the starting stock of May. Ending stock of May becomes the starting stock of June, in that order, right? So if you pay attention with me, it becomes a little easier for you. Okay, so let's go to the work area, Excel book. Okay. I just want to prepare a budget for, I'm going to do production budget. All right. So for my production budget, I'm just repeating a lot of figures. I'm repeating the sales unit. Okay, I'm repeating the sales unit. What I need to compute is the ending stock. But ending stock is usually added to your sales unit. So add ending stock. Okay. The policy thereon is that it's 15% of planned sale for that month. 15% of planned sale for that month. So ending stock of April will be 15% of the sales unit of April. Right. April's ending stock will be 15% of the planned sales of April. So it will be equal to, pay attention here. pay attention here. Other than that, you get a bit disturbed. The policy says it should be 15% of planned sale for that month. So the planned sale for the month of April is 18,000. So I'm going to multiply 15% by 18,000, which is this. And then I'll get this. If I come to May, it's 15% of planned sale of May. So I'll multiply 15% by May's planned sale. If I get to June, it will be 15% of planned sale of June, right? So what become of the figure? Who can help us? You have to compute it from your end. You have to compute it from your end.
2007.
So first 3 months 2,700 each.
Okay. What will become of July's planned ending stock? Sorry. Ending stock of July is what? Yusuf, I've allowed you.
3,750.
Okay, 3,750.
750, yeah.
What about August?
It's like that throughout 3,750.
Okay, this is just by coincidence. Sometimes the figures may change. So
Oh, okay.
don't anticipate that always it will be the same. Okay. We need to put a total here. The total here is supposed to be 3,750. 3,750. And I will explain that. You see, at the end of the period under consideration, which is a 6-month period, all the ending stocks here will not be added together. They would have been consumed. They would have been consumed. So you cannot add them. You can't add them. So we don't add the ending stocks to generate a total. However, we only consider the final ending stock, which will be the remaining ending stock at the end of the period. So at the end of the period, the ending stock that's supposed to sit here, or the total that's supposed to be sit here, is 3,750. And then it came from September. Right? So we don't add them. Okay. We may have to less from here. We have to less starting stock. We don't work anything for starting stock. Of course, if you remember, the conversation is that the ending stock of period 1 will become the starting stock of period 2. So ending stock of April becomes the starting stock of May. So ending stock of April 2,700 becomes the starting stock of May. Ending stock of May becomes the starting stock of June. So in that order. Ending stock of June, this one becomes the starting stock of July. Right. So what is the ending stock of September? What is the starting stock of September? Who can talk about it? What will be the starting stock of September?
3,750.
Can we also anticipate the starting stock of October?
It will be 2,700.
No, and this starting stock of October in the same year. Can we anticipate it?
3,750.
Yes.
3,750. So the presumption is that should we go to next year, or should we go to the next month of operation, we're going to carry this ending stock to that period. That's what we are saying, right?
Yes.
Okay.
Yes.
So can we also anticipate that since the business has been there for some time, there can be an ending stock of March? That should be the starting stock of April. Can we assume that?
Yeah, we can assume. But which figure are we going to use?
That is if the sales units.
The question gave the sales unit. The question gave it.
It gave 16,000
If
if
you
I'm not
remember,
lying.
I told you there's a certain figure, it could be there just to confuse us, or it's there for
Yeah.
pep.
Yeah, I think
Yeah,
there was
so
a
this is it.
16,000.
This is it.
March 16,000. Yeah.
Mhm. I hope you are following the conversation. It's you see, let me say this, not to scare you. Budgeting is not difficult, but it has a lot of English that you have to understand. Right? It's pure English stuff. If you really read the items and you understand them, you can easily do it. The rest of what you have to do with budgeting is mathematics and few accounting. There are a few accounting. The opening and then the ending and the starting stuff. Like those ones are accounting. But the rest are just you adding and multiplying, minusing, and those ones. Okay, so that's it. So with this figure, we can compute the ending stock of March, which should become the starting stock of April. Okay, so can we get someone to do that for us? 15% of 16,000 is what? %15 of 16,000 is what?
That's 2,400.
I'm sure someone will ask, where did we get
Yeah,
the
2,400.
If you're not paying attention, you would come back to ask, Isaac, where did we get the 2,400? But we've computed it. We're saying that ending stock of March will become the starting stock of April. And then March's figure, March's plan sale was given to us to generate this figure. Right. So that is it. Okay. Having done this, we don't do any total for this. There was no total. We don't do any total for this one. We don't do total for starting stock. Okay. From here, we can add and subtract. We can do the additions and the subtraction to get what we refer to as required production unit. The addition and subtraction here is that we adding sales units to ending stock, then we're going to subtract starting stock from it. Okay, so that will generate us. What do you have on your calculators?
Isaac, please, I have a question.
Okay, Fatia.
All right. So please, you see last week, the budget question we did. When we got to the starting stock, right? There was this figure again that we were supposed to put there, but we didn't strike it to 100%. We just placed the figure there.
Oh, me, I missed it.
I don't. But
Do you understand?
see, so, Fatia, if you bring this here, we are going to sway a lot of people.
Oh,
Huh?
okay.
Because a lot of them were not in class. So if you bring it here, it will sway a lot. So maybe after we can do a backdoor conversation and then I'll get what we're talking about.
Oh, all right, sure. So later.
Okay.
Thank you.
All right. Is there any other question? All right. So we adding 18,000 to 2,700 and then taking away 2,400. If we do that, we're getting 18,300. 18,300. If we come to May, we're going to get 18,000. June, we're going to get 18,000. What am I doing? So 18,000 plus 2,700 minus 2,700 will give us 18,000 for me. June, 18,000 plus 2,700 minus 2,700 will also give us 18,000. Okay. So that is it. If we come to July, 25,000 plus 3,750 minus 2,700 will give us 26,050. August, 25,000 plus 3,750. 3,750 minus 3,750 will give us 25,000, sorry. The same apply to September. Okay. But I need you to work it on your calculators so that you can have a feel of what is happening around. Okay. So this becomes the total required production unit. Okay. Okay. We can highlight this in this color just to indicate that it is very relevant. It's good. This is good. Eh? It's relevant. Okay. It's relevant because you're going to multiply all the cost element with this. So we have to introduce the currency sign. You have to introduce the currency sign. Ghana cedis all throughout. We incurred cost on material. So we're going to bring it here. So direct material cost. How much is that direct material cost per unit? Is it 17 or 15?
Yeah, 17.
17.
Okay. We also incurred cost on labor, so direct labor cost.
Yeah. 21.
How much? 21 cedis. 21 cedis. Then we incurred cost on phase overhead cost. How much is that one too?
12 cedis.
12 cedis. Hey, and your labor board in power. Okay. So we're picking on the direct material for each month. Direct material for each month. So for the material usage, we want to know how much we spent on the materials that we used in production. That will be 17 cedis multiplied by the required production unit in April. If you go to May, you're going to still multiply 17 cedis by the required production unit in May. And then you keep up with the working till you get to September. In all regard, remember that you are multiplying with the required production unit. Okay, so what do we get? Are you fed up with me or?
No, we are not. So we can't.
No, we are following.
Isaac, we have 306,000.
I know you want to chop New Year, but New Year's tomorrow next week. So today we have to wait. Okay.
306,000.
2.
300.
How come I'm getting something different? That's why I need you to
It's
try.
311,100.
Right.
How?
So
Okay, 300. I saw it's
if you
8,000.
try it and you make a mistake, it's better. Make a mistake in class than go and make a mistake in the exam room. So for Fatia like this, she won't make this mistake again. Okay. So if I come to May, I'm multiplying 17 cedis by 18,000, which is the required production unit.
300,000.
306,000.
306,000. And then I do same for July. If I come to, July, I'll do 17 cedis multiplied by 26,050. Right.
442,850.
Powerful. All right. What do we get for month August?
425,000.
425,000. then we may need to add them. We need to add this. So you could just have gone through to also generate. Okay. So we're finding the total of this, total of from April to September. All right, the direct labor, we have to multiply the direct labor cost per unit, still with the gold element. This one, the required production unit. We multiply.
384, 300.
384, 300. Okay. If I come to May, I'm going to multiply 21 cedis by 18,000. Same with June. If I get to July, I'm multiplying 21,000 by 260.50. Then in August, I'll multiply 21 by 25,000. And then September, I'll do same. And then I'm able to generate my total. Okay. Then we can look at fixed overhead cost. Fixed overhead cost. Fixed overhead cost is 12 cedis. So it goes through the same process, sort of. So 12 cedis times, still with gold, required production unit. Right, required production unit. So that gets us how much?
$219,600.
600. Okay. If I get to May, I'm multiplying 12 cedis by 18,000. We'll do multiply 12 cedis also by 18,000 in June. Multiply 12 cedis by 26,050 in July. Multiply 12 cedis by 25,000 in August and in September, respectively. Right, I'll do that. Then we generate my total as well. Okay. These are the cost elements that comes to production budget. Okay. So at this point, I can think through and say that, well, my total cost of production is going to be equal to the total here. Sorry, the material cost under April, labor cost under April, and overhead costs under April added together. So look at me do it. So this plus this plus that. Okay, so that gets us overhead cost. Sorry, our total cost of production. 91, 50,000. Is it 50,000, 5,000? 91, 5,000.
915,000.
Is it again?
915,000.
You are good. Okay. All right. So if I get to May, I'm going to do the same thing, but there was a short way. Remember, short routes can be dangerous, so don't listen to me. But I'll show you anyways, so that if you want to be diabolic and act like me, you go through that process. Anyways, that one is easier. It's easier. Having to go through, or I had this plus this plus this, this plus this plus this, this plus, it's long. But you could just have mentioned that your total cost per unit, total cost of production per unit is 17 plus 21 plus 12. How much do we get? Is it 50 or 60? 60? Or
50.
50.
50. Okay.
50.
So if I were to be you, I'll just say that, well, my total cost is 50 cedis per unit. And then 50 cedis per unit, I'll multiply 50 cedis by the required production unit. 50 cedis by the required production unit. And then I'll get the same thing. Can someone try that for April? 50 cedis by 18,300.
915.
It's
915.
915,000.
915,000.
So this is easier. And then I would advise you that if you find time, try to understand this approach rather and use it.
Isaac,
see-
please, is it always safe?
Oh yes, under this it's safe.
Oh, okay.
Isaac, would you be marked down if you use this? Because I mean, you'll be marked according to your working. When you go for this option, is it okay? And would you lose any mark?
Not at all. You don't lose anything at all. Yeah.
Okay, that's fine. Thanks.
All right. Okay. So if I come here, for those of you who do additions of this plus this plus this, that is it. That's the process. But well, me, this is so disturbing. So I'll just do 50 times just the required production unit. Then I will be far gone. Right. I'll be far gone. So that's it. And then this becomes our total cost of production. Total cost of production. This total cost of production, you're not going to even use it to do anything ever in the preparation of the budget. But it was important you compute it. It was just important you compute it, right? But you are not going to use it anywhere in your budget preparation again. As why then do we have to work all this? Well, you may have to work this out because there will be marks allocated to it. That's all. Far from it. It's not important. Yeah. Okay. This is supposed to have ended the production budget. This is supposed to have ended the production budget. But many a times we speak about depreciation. A lot of times we speak about depreciation. Depreciation it's a cost. And then
Hello.
this cost, yes, hello.
Isaac, please, we lost you for a minute.
Oh, interesting. Is it better now?
Yes.
Yes.
So I'm trying to explain that this should have been the end of production budget. But a lot of times, when people are allocating costs, they tend to include depreciation as part of overhead costs, right? As part of overhead costs. So the first time I met you, I told you that overhead costs include, among all other costs, apart from the two that we have labeled here. So depreciation is also part. And then because depreciation is not a cash element, we usually may have to take away depreciation from overhead costs because overhead costs would end up in the cash budget. But it cannot end up there with depreciation being part of this figure. Other than that, you'll be doing a great disservice to yourself, right? So usually you would have to take away depreciation from this before you present the final figure as your overhead cost. So I would advise that we put depreciation, we work out depreciation and put it down here. Depreciation and put it down here. But where do we get an information for depreciation? It's in the question. It's here. Let's see if we can read that section. We were left with some few readings. It may be assumed that sales are evenly spread throughout the months and that depreciation expense of 2 cedis per unit. This is so important. 2 cedis per unit. 2 cedis per unit is included in production overheads. It's included in production overhead. If we talk about 2 cedis per unit, it means for you to get the total cost of depreciation, you may have to multiply by a per unit item, or something in units. So the required production unit still is good, right? So we have to go multiply these 2 cedis by the required production unit to get how much depreciation was charged in each and every other month. Okay, so let's go back. So depreciation is 2 cedis. Isaac, but why didn't we take away the 2 cedis from the overhead cost? Yes, if you have done that, then your production overhead cost, production cost, or total cost of production will be underestimated, and that will be wrong. So we don't take away 2 cedis straight away from the 12 cedis, so that here will become 10. Okay, if you do that, these figures will be wrong. The totals will be wrong. All right. Okay. So we're computing depreciation of 2 cedis. And then we're multiplying it with still the gold item, which is required production unit. So each month, you compute depreciation by the required production unit. And then that becomes the depreciation that should be taken away from overhead cost or production overhead cost before it's taken to the cash budget. Well, now we are bold to say that we're done with the production budget. The next thing that we may have to look at is, I think, some of the schedules. Yes, someone is asking a question somewhere. So depreciation as an expense is in an overhead cost, right? Yes. So depreciation cost as an expense, it's included in depreciation. It's included in overhead, right? So before you would present your overhead cost to the cash budget, Percy, we have to take it away. Take the depreciation from the overhead. Of course, the accountant or whoever is doing this hasn't made a mistake. It's a cost allocation, right? It's a cost allocation. But we as business people want to be prudent enough and then deal with issues of depreciation. That's all. Okay. Let's see. Let's go look at the other requirement of the question. The third requirement says that we should do schedule of payment to suppliers for 4 marks. So let's quickly do that. Schedule of payment to suppliers. At what point in time have we...
Sorry, Ike.
Yes.
With the depreciation,
Okay.
how did you get it? So you calculated 2% of the required production unit,
Yes.
2%.
Yes. 2%
So what
of the
if I
required
get
production unit.
181? Oh, please, I'm coming. 18300. But why am I getting 366? And I realized you had 36600.
You multiply, you don't divide. You don't, it's not in percentage, is it?
And so
It's not in percentage. It's in
You multiply, it's 2 cedis, so you multiply with the required production unit.
you multiply it 2 cedis.
Yes.
So 2
Give
times
it to you in a
8.
figure. Yeah. 2 times
Okay, so 2
1,800.
times. Okay, thank you.
I think this is the same place that Patia was asking. Okay, let's add it. You are okay. So we're going to prepare schedule of payment to suppliers, but let's take on the suppliers policy. Here says that suppliers grant a month credit for 50% of each month's purchase, and the remainder is paid for in the month of purchase. This is straightforward, right? It's straightforward. I mean,
I please,
yes.
I beg you. Why are we multiplying it by 2?
Is it the depreciation?
Yes, why are we multiplying it by 2? Why not divide?
I'll ask the same question. Why do we have to divide? You see,
I'm coming over.
We want to compute cost. All the times that we are computing cost per unit, remember, we're giving, they said here that the firm's cost of production for a unit of item is as follows. Direct material cost is 17 cedis. So this 17 cedis is per unit. So we multiply 17 cedis by the required production unit, because we want to know cost, how much it costs us to compute, to produce
A
each
direct
item,
material. Yeah, okay.
right? Each item. Great. So if you also want to know if you use your machine, if we are considering machine, which is depreciating, if you use your machine to produce each item, the machine depreciates at 2 cedis. Right. Each item
Okay.
of production, the machine depreciates at 2 cedis. So if you
Okay.
produce 100 and something, is it 100 and I forgot.
Let me not stress you. I think I get it. From this point, I get
Right.
it.
Okay. So if you produce 1,800 items, right, you have to multiply 1,800 by each unit cost. That is why we are generating.
Okay. So on that note, after you get the depreciation figure, are we going to less it from the overall overhead? Because
yes, we're going to take it away from overhead cost. We're going to take it away from this. But at a later time.
Okay, not now. Oh, okay. Thank you so much.
Hi, please. So at this stage, it has no effect on the total cost of production, right?
Not at all. The depreciation cost will not have any effect on the total production cost.
Okay. All right.
Yes. Okay. I want to do schedule of payment to suppliers. Number 3. This is not a budget. I've always said this, but this is not a budget. Schedule of payment to suppliers. Okay. At what point in time have you engaged or will you engage suppliers when you buy raw materials? Right. So down here, you want to look at how the raw material costs were paid for. So I'm going to bring down here the raw material costs or the direct material costs. I'm looking at how the payment was done. And then the policy is that, let me just highlight it and then try to underline the whole figure so that I won't confuse it, other workings that I'll do going forward. Okay. The policy is that suppliers would allow you 1 month credit for 50%. And then the remainder is paid in the month of purchase. So the remainder is what you actually pay first before the credit terms follows. Right. What adebia ewo suppliers kwa omama obosoma baako se fotua 50% aka. Nanso nia percentage na aka no o se wotua wo month na woto ade no omu. That is the fancy version, or is it true version of the policy?
Oh yeah, no, this is true.
Yeah, this is true. Woto ade bia suppliers no omama obosoma baako se fotua 50%. Ewo ka wode no. And so za aka no and I say 50% na aka no or say wotua ewo bosom na woto ade wo. That is it. So the first payment is 50%, and then the other payment is also 50%. So we first have to look at the initial payment. Initial payment of 50%. The auto April no, or say wotua 50%. Ewo April. Na wotua 50% aka no ewo May. Nya woto ewo May mu nso no, or say wotua 50% ewo May mu. Na wotua 50% aka no ewo June. Nti the auto e bia no edikan no, you have to pay 50%. So let's work out for the first 50% that's supposed to be paid in the month under consideration. That's what we are considering as initial payment. So here I'm computing 50%. Please, are you following?
Yes.
I'm paying the initial 50% of this figure.
Yes, please.
If I come to May, I have to pay the initial 50% of May. initial 50% of May. If I come to June, I may have to pay the initial 50% of June. How much would that be? Let me see if you are following.
You add them.
Hey, Vera, you are there and you are not talking.
I've spoken a lot of times, sir.
Oh, sorry. Means
Yeah.
there are a lot of voices going through my ears. But it's okay. I'll manage it. Yeah. Yeah. So what are you getting for June? The initial payment that you have to do in June, how much would that be?
Did the figure change from the question, or it's still 50%?
We are still considering 50%.
It's
The initial
153,000, but the same.
It will be the same.
153,000. Great.
1,000. Yeah, it will be the same.
What about July? The initial payment of 50%, how much would that be?
222,145.
Okay. Percy, are you there? Are you following small?
I am, please.
Okay. So we're going to receive 50% of all this in the month under consideration. In the month under consideration. Then we're supposed to do the total sum of all this. Yeah, I'm sure someone will say, Isaac, but it could have worked if we do 50% of the total. It will work. But the second payment may not work. That's why I have done this. Okay. So let's consider the final payment. Final payment. How do you spell final? Final payment of 50%. Okay. Okay. So when are we going to pay the final payment of April? When do we pay the final payment, or where do we put the final 50% of April?
That will be in May.
In May. So here is 0, right? And this is 0.
0,
when
yes.
we come here, we just computing 50% of 50% of this figure is paid in May. Right. The other 50% of May.
Sorry to draw you back. Please, how did we get the initial payment of 50%? I just got lost a little.
Okay.
Okay. Christy, who is going to help Christy?
Okay, so it's 50% of the direct material, which is
It's in the question.
It's in the question, so you have to go to the question.
All right.
Sorry. But if she goes back to the question, we have to explain to her. Okay, so Christy.
No, he's just asking where we got the 50. So if you refer her that it's from the question, then you use how you did the calculation, then he can understand. So we are not just making inference that she just know. We are saying that it's the question requested that. Yes, please.
But so Christy, this is it. Suppliers grants a month's credit for 50% of each month's purchases.
Isaac, please, somebody is saying that the recording has dropped. So if you can make him a co-host.
Hey,
the only thing is if you record Shell, Albert.
Albert, I've made you a co-host too. And I'm a boy. Where is you? Raise up your hand, Albert. But Posh, your recording will be super. So what do you back? You have to give us your recording. Hey, Emma, you are here. Mr. Koa, you didn't call me. We will sort ourselves behind closed doors. Albert, sir, you are still a co-host.
Yes, I am. Yes, I'm still recording.
Okay. Is Fatia here? Fatia. If Fatia is gone, we have to wait for her. Fatia, are you here? She's a course rep. Okay. Understand? I've muted you. Okay, we are continuing.
Isaac,
Yes.
Emilia here. Before we continue, reading the question, I see that 50% of each month's purchase is paid, and the remainder is paid in the same month. But when we were calculating the balance of the
Emilia, we've lost you.
Okay,
Oh,
I think
have
I
lost
get
you.
her question. He says that the remainder is paid
percent, you
in
just
the
said that option.
same month.
Yes,
So doesn't it mean that the remainder of the
goes
50 is
into the
paid
next
in the
month,
same, yeah.
in the second month. But in the first month, we had put 0. And in the second month, we had put the remainder. I wanted some clarity there. Thanks.
Okay, so look at this. Suppliers grant a month credit for 50% of each month's purchase. This guy, this first statement here, this is the credit terms. So appropriately, this is the second payment. This is going to be the second or last payment. These payment terms are in 2. The item is 100%. Your suppliers are saying that pay 50% in next month. And then the question was justice enough to say that, and then the remainder is paid in the month of purchase. In some cases, they won't even say it. The question will be blunt. He will keep quiet on it. Maybe I have to show you one. let me quickly show you one. I'll get back. I want to take you somewhere. It's not showing. Yeah, but if it gets to show, you can go to page 19 of your question bank. In that question, he won't tell you that the remainder is paid in the month of purchase. But Emilia, if they're telling you that the remainder is paid in the month of purchase, all what they are telling you is that after you gave the 1 month credit for 50%, the other half is paid when you buy. Right at when you buy, you pay 50% of it. So that becomes the first payment. That becomes the initial payment. Right. Though here they have spoken about a remainder, but this remainder is actually the initial payment that you have to do. Right. And then you will come back to do the other payment later in the other month. So in our workings, we have shown here that, let's go back to the working. We have shown here that the remainder, which they were saying, is paid in the month of purchase. The remainder is paid in the month of purchase. So 50% of this is paid in the month of purchase. And then that is this. 50% of this is paid in the month of purchase. And then that is this. The other 50%, which went into credit, is this guy. Right, is here. Is this one.
Isaac, I got it.
April. Okay, that's fine.
The only thing that made me ask the question for clarity again, Isaac, can you hear me?
Yes, I can hear you.
The only reason why I had to ask for the clarity is that I got what you meant, because, for instance, if I buy in the month of December, I buy on the 1st, and I'm being given a credit for 1 month, I will pay half in December and the other half 1st of January. So it goes into the next month, okay?
Exactly.
So on that score, I understood it. But it was when I had to read the question again, when you had projected it. That's why I had to ask for the clarity. So I'm very clear, Isaac.
Okay, thank you. Welcome. So when we pick up on May's other half payment will be done in June. Right. So we're going to do 50% of this in June. I'm taking my time to do all this because in some instances it will change. The conversation will change a little, right? So the other half payment of this is paid in June. The other half payment of June will come in July, and then that will be also 153,000. The other half payment of July's direct material purchase will come in August, and then that will be 221425. The other half payment of August will come in September. All right. Okay. At this point, someone else will say that couldn't we have estimated this figure? I just realized that we could have estimated this figure to some extent because we were given March plan sale. Then we computed plan March ending stock. We can't find March opening stock, so we can't estimate it. It's okay. It's okay. Sorry. I was overthinking. All right, so here is 0. Here becomes a 0. Then we can do the addition. We can add this. Oh, okay. So we want to look at how much we paid to suppliers. So total payment to suppliers. The total payment to suppliers will be additions of the initial and then the final payment. The initial and then the final payment. So we're adding 15,000 to whatever figure that we have here. Is it 15,000? 5555020. Okay. So that's what I have generated here. Right. So if you come here, we adding this to this to get us the 36,000. If we get here, we adding this and that to get the 6,000 in that order. Okay. This is very relevant because you're going to use it in our cash budget. So let me bolden it, underline it. Yeah. Okay. Now we may need to do per the questions or per the requirement, we have to do schedule of receipts.
Please, I have a question. I thought when we total it, we would get the total amount of the can we please go back to yes. Is it because we are missing March?
Yes, because some of the figures are crossing to other periods. You won't get the same thing.
Okay.
You're saying that here like this, when you add this and 0, you're supposed to get this. We can't. We can't get that. Because half payment of this.
Isaac.
Okay. No, I think you.
No, it's fine. Please end. I wanted to tell her that it's because of the terms of payment that was given to the person who bought the product.
Yes.
Okay, or the material. It was given a 30-day or a month terms of payment. So in every month, you will not get exactly the cost of material you bought. It would rather be your half plus half from the previous month. That will give you a different total. Just to add on to what Isaac had said.
Yeah, you get it.
Yes, please.
Okay. So we're trying to do the fourth requirement, which is schedule of receipt from customers. Okay. All right. At what point in time have we engaged with customers? Have we engaged with customers from our operations, the preparation of the budget?
Sales.
When we sold, yes. Sales. So on your answer booklet, you just have to bring here your sales values. Your sales values. So you rewrite your sales values, and this is the sales values. Here is a little disturbing, so you have to really pay attention. Really pay attention. Okay. Let's go and read the policy.
EMBA for question.
Let's go and read the policy with customers. Okay, so the question is actually not EMBA. It was a weekend, either weekend and regular. UGBS 601. EMBA is MBA 601 or 603. I forgot. So it's a weekend question. But if you're able to do this question well, I'm sure the rest of your life budgeting becomes easier. Okay. Let's see. Fatia read this session a lot of times. Fatia, will you read for us? In order to secure the orders, the sales team had to negotiate payment terms with customers. So let's look at the negotiation. Only 10% of the customers agreed to pay immediately for the product. So this is cash sales. Right. When you buy, you pay. Right? And when you buy, you pay. Cash sales. Is it true? Can we say that that is cash sales? Let's agree to disagree.
Yes.
Yes, Isaac.
To pay immediately for the that's cash. Immediately. That's cash.
Okay.
Yeah.
So if we say that 10% of them will pay cash, it means we can compute the 10% and then we'll take it away from whatever is left. Whatever is left becomes the credit sales. And then the credit sales would assume 100% after the cash sales is deducted. Let me go and put this into practice. I'll come back to the other one, the other section. This is a little disturbing, but let's try to understand the English. Me too, I'm trying to. So if I'm getting it wayward, then just bring me back. It's English, so we're trying to understand what they are saying there. So they are saying that out of this sales values, 10% of them paid in cash. So I'll say cash sales of 10%. So 10% of this is computed as cash sales. So I'm multiplying 10% by all the sales values.
Oh, you didn't make a percentage. That's why.
Okay. Yeah. Okay. So that's 10% of this. And 10% of the rest will show as such. Okay. So what I'm saying is that if I should take away the 10% from this, then I'm getting what is left for as credit sales. So I can call this guy credit sales. credit sales. And then this is very important to our conversation. It is very, very important to our conversation. Let me make it some wavy. Okay, so I'm trying to generate all my credit sales. Okay. Okay, so this is the credit sales. Can we at this point say that the credit sale has become 100%?
Yes.
Okay. Percy, do you agree that after the credit sales, so after the cash sales, if we generate the credit sales, if we are talking about credit terms, the credit sales would assume 100%. 100%. The credit sales, if you are talking about credit sales, then it assumes 100%.
I mean, I remember some 2% that was said to go bad or something.
Yes, you've not gotten there. You will get there very soon. So let's go back to
But
the
they
reading.
also said some remainder.
Okay. So they're saying that of the remaining customers, which the remaining customers is 100%. The remaining customers, they are credit customers. So that credit customers, 60% of them agree to pay 1 month, pay after 1 month. Right? 60% of them agree to pay after 1 month. What does that mean?
It means that when you take the 10 out, the rest is being treated as 100%. 60% pay after 1 month, the rest 40 pay after 2 months.
Okay. The rest 40 pay after 2 months. That is perfect. Right. But we also careful with facts that they tell us that within the industry, it is known that 2% of the credit customers never pay because probably they go out of business. Right. So of the remainder, 2% of it will first go bad before we come and subject it to 60 and then the remainder. Is it so disturbing?
Very. Very disturbing. Why is it that we are not just
is Uncle Michael in class?
60% from the original sales value?
Why are we not?
Is it because of the English?
I think we should highlight, we should underline of the remaining customers. So the 10 is out. The remaining is not 90. The remaining we are treating it as 100 now. I don't know.
This is where Percy is saying we should highlight.
Yes.
So it's no longer referring to the total sales, it's referring to the balance.
Yes, we are talking about the credit sales, the balance.
The credit
What is
sales, 100.
Hey, bro, who had been power?
Yeah, man. So, well, for budgeting, I think it's the English. If you don't pay attention to the English a little, it will be disturbing. Yeah. But my interest is in the 2%. The 2%.
So Isaac, I think yeah.
Okay.
So I think you see we need to separate the cash from the credit. Okay. So when we get to the credit side, okay, we first need to find out when you said 2% of customers never paid. So we first need to identify those 2% out of the credit. Then the remaining balance will be segmented into the 30 and the remaining 40 from the difference left.
No, come again with your figures.
So I'm saying we have credit customers and we have cash. Let's separate the cash. Once we've identified the 10% out of the total, the ones left will be identified as 100%. Now we come and identify 2% of the customers who never paid out of the total. Then the remaining balance will be segmented into the 60 and the difference.
Okay. That's all what I'm letting you understand. Uncle Patrick, let's hear you.
Yeah, I basically I wanted to say the same thing, so I just had to drop my hand down. Yeah.
Okay.
Because it makes a lot of sense to say for cash, there is nothing like there's nothing like bad debt because people are just giving you the money for the for the service or goods you are selling immediately. Okay, so it is with the credit side that you could tell whether there's going to be a bad debt or not. So it was just that clarity my colleague just gave.
Great. So you're saying that we should do bad debt. Please pay attention. Bad debt. And somehow I want to write bad debt and then I'm writing other stuff. So bad debt. Bad debt is 2%. So we're computing 2% on the credit sale. 2% on the credit sale. So 2 times the credit sale for each month. And that is generated as such. Okay. So what do we do again? Should we take away? Okay.
Yeah, we take the bad debt from the credit sales for each month.
Okay. Great. So this minus the bad debt. All right. So this is what we are left with. Okay. So this can be called remaining credit sale. Okay. Then from here, what do we do? From here, what do we do?
We work
We
out
identify
the 60%.
Okay. So we work out or identify the initial receipt from credit customers. Which is 60%. Right. 60%. Okay. When is that received?
60%
May.
agreed pay after 1 month.
After 1 month. So here is 0. It comes up rather here. So it becomes 0.6, 60% times the 21,320. Okay. If you pick up on May, 60% of May's figure is also received in June. 60% of June's figure is received in July. July's figure is in August. August's figure is received in September. September is lost to October, right? Then we can do the total. Okay. You really need to understand this grammar better.
Please, I can't hear anything.
Isaac is on mute.
I'm sorry, I got an interruption. Yeah, so sorry, I got an interruption. So initial receipt of 60% from credit customers is this. Okay. Let me try to separate these two figures. Either than that, you would be confusing ourselves with the working. Okay, great. So what will be the final receipt?
Maybe we should highlight the
40%.
cash we are receiving so that the total addition will not confuse us.
Which one?
28%.
The cash we are receiving, the cash and then
this one?
The 10% and then the 60% and then the final.
Okay. Yeah, so we can highlight this one
I thought it would be
into
28% instead of
a yellow.
30.
What will be the final receipt?
38% instead of 40 because there was a bad debt.
No, it will still be
Wrong.
40%.
So
It's still
you
be
see,
40.
it will still be 40.
Because we have the remaining balance. We've already deducted the 2% and we have a remaining credit sales.
Yes.
Okay.
But
could
this
you have done it
conversation,
directly? Could you have done it
like how?
60 and then 38%?
There
Or
will
that would be
be
wrong.
2% left. If you do that, there will be 2% left.
Okay.
Right.
Please let's look at the question again, please.
But there can be another question that will require you to do what you are doing, what you are saying. Vera.
Okay. Yes, sir. Okay.
Yeah, so this is the question. Let's check. Let's hear you.
Vera or Percy, please. I thought it was Percy who requested the questions
Percy.
to check.
Yes, please.
We are with the question now.
Yeah, of the remaining customers, 60% agreed to pay after 1 month and the remainder after 2 months. Within the industry, it is known that 2% of credit customers never pay because they go out of business or dispute the invoices due to reason. Okay, blah. So I think the 2% forms a part of the 100.
I
Maybe I'm
agree.
confused.
No, I agree with you. I was also thinking same. Isaac. Because Isaac, if I may come in, from your explanation, you said that once we take out the 10% cash, the remaining 90%, the remainder of the credits, will be equated to 100%. So if we are equating the remaining credit to 100%, then the 2% credit customers should, come from that 100%. I tend to agree with Percy. And so I'm thinking that the 60% should come, that it should be 60%, 2%, and 38%. That's what I.
But it was the same thing that was done. The 2%.
No, when he was calculating, he didn't use, he deducted the 2% before he used that value to. He used that value to calculate for the Isaac, if you can come back, if you can bring your solution on. So I had a bit of difficulty at that time.
Excel.
The Excel.
Okay, so Excel is back.
Yes, so for me, I was thinking that when we were calculating for the 2%, we would use the credit sale, the 113.
1,13400. This one.
Yes, no, I mean, when we're calculating for the remaining credits, one of them, I think I'm a bit confused now, but if you can take that point again, I'm struggling with that.
I think that when the 10% was stated, then after the 10%, they stated that of the remaining, then now the percentages started. 60% of them did this. The rest will pay in a month, then the rest in 2 months. Then later they are stating that it is known in the industry that 2% become bad debt.
Yes.
Okay.
So I don't know, maybe unless maybe.
So let pick it small.
Yeah.
It's a little difficult to always come by this. It's an industry thing, right? The industry's policy or the industry's issues supersedes that of the business, right?
Okay.
So if the industry is saying that out of the entire credit customers, 2% of them will not pay, it means that you have to first take away the 2%.
Okay.
This 2%, you have to take it away from your credit customers.
Okay.
If you take the 2% out of your credit customers, all the figure left again becomes 100%.
Okay. Noted.
However, if we tend to do 38%, in between the figures, you see that a certain figure is not paid. I can let us do the 38%, and then we will cross-check with our figures and see if we are if you would get me right, why I'm saying that, or why Emmanuel and I are saying it should be 40%.
No, I get you now. From your explanation, I get you. Since you've said that the 2% industry supersedes the business, I think I get you.
Yeah. Percy, do you also agree with this?
Yes, the last part you said that if we sum up the figures, that one will still be missing there. Then I think then it is the figures speak better than the words.
Great.
And to add, when you look at sales, we are saying credit sales. And if we recorded
we get feedback. So if you can.
Is it okay now?
Well, you manage it.
Yeah, so I was saying if we've recorded bad debt shouldn't be part of the credit sales. So you take it out of it, then you focus on what is left. And that is what you would realize from your customers. So I think
Thank you.
the remaining credit sales becomes 100%.
Okay. Thank you for that clarification.
I'm sure one of these days I'll come with a different question that the conversation will change. The bad debt will be worked out after the initial payment, right? I'll come back with another question. So you see, I always tell you that some of the questions, I mean, with accounting, we won't finish discussing issues in accounting. Certain times, the question that will come, you have to really consider what the question is actually saying, and then be able to speak to the situation. Pacey will say this. Accounting, we are always.
How did we get the credit sales again? Sorry, I'm just a minute.
Okay, is it this one?
Yeah. Yes, please.
Okay. So there was a cash sale of 10%. So when we computed 10% on the sales value, then we took the cash sales from the overall sales value. That generated as the credit sale. So if you look at it from here, is the sales value minus the cash sale.
Okay.
Right.
Yes.
Sales value.
Yes.
Okay. And then there are some questions. I'm sure that's what you are saying. Okay. So the final receipt receipt of 40%. Okay. So when is that received?
In 2
Here
months.
is 0. Here is 0. So it means it comes under June. So this is equal to 0.4 times. So we come back to this figure. Right. What someone else could choose to do is not to work with the percentages. If you think that the percentages will be so confusing, then you say, well, let me just forget about the percentages. Why can't I just subtract whatever that I paid initially from this item? So that is it, right? And then you still get the same thing. But here's where I'm saying that if you had worked with 38%, then there will be a difference. So Percy, let's do 38%. This is not part of the whole. So if we had done 38%, this is how it's going to look like. Then there will be a difference. So this is 38%. This is 40%. But when you add this to this, it should give you 111,320. But if you had added this figure to this figure, it won't give you this. So this is the difference that we want you to have a look at. Okay. A lot of things have been said here. I'm sure if you go over the recording, you'll be fine. The more reason why I chose this class to be online, so that you can easily revise on this. Okay. I hope I'm speaking a lot of sense. Okay. So when we come here, we're going to do also 40% of May's remaining credit sales remaining here. And then the rest will continue, right? The rest will continue. Hey, this is not true. Okay. Great. All right. So we find the total for this. Some of the payment terms can be more than this. You can have about 4 or 5 payment terms. So if you are dealing with that too, then you pay attention to it. Okay. So now let's see total receipts from credit customers. Total receipts from credit customers. Total receipt from credit customers. That will be an addition of the 2 receipts from credit customers. So it will be this plus this, which is a 0, because there was no figure there. When it comes to May, it will be the initial plus the final. If you come to July, the initial minus plus the final, all throughout the periods. Okay. Is there a question in the chat room? Let me see.
Questions loaded.
Okay. All right. So if you go to the cash budget, this information is so relevant there. This information, this one, the total. So I overheard someone say that, Isaac, can we highlight the cash sales and then something else also? Okay, let me underline the credit sales. So the receipt, the total receipt from credit customers. Let me highlight it, bolden it a bit, and then maybe italize it. Then I would also highlight it in this color, right? If we go to the cash budget, these are the 2 figures that we are taking there. The cash budget, we are taking this figure, the cash sales, and then the credit sales, how they were received, right? So we are taking these 2 figures to the cash budget. Okay.
But Isaac, under the receipts from customers, are we not supposed to calculate the total receipts, which is the credit receipt plus the cash receipt?
Yes, so you can choose to do that, or just as I said, you can just lift this up straight there, and then you lift this also up straight there. So what I'm trying to say is that we can just go and then report this as a receipt in the cash book, and then we will report this also there as a receipt in the cash book, so that at least you can see that all your cash sales is coming in this form, all your credit sales is also coming in this form. However, you could also add the two from this level, and then
And
present
then
the
take the
total
total.
there
Okay.
and take the total to the cash budget. So whichever way works. Right.
Okay.
Okay. All right. Now we can do the cash budget. Cash budget. Okay. Let me go and copy something and use it to do something. Why A?
Hey, Isaac. Into questions for this, would it be like 3 or 4 questions? Only one question, 1 hour. More than that.
Oh, is it not because we are learning?
Oh, okay.
Yeah, but if you are doing this all by yourself, I'm sure you would have gone
Then
through.
we've written it a lot
Sorry, I didn't get you.
in terms of the answer.
Can I ask for 2 minutes to use the washroom?
Most definitely.
Yes.
Definitely. But please, can you put this on a whiteboard for me? I want to complete the schedule receipt for my customers, please. I'm here to complete. Thank you. Hey, Rade, I'm wishing we were in Kumia, me make one.
It is well.
Yes, so
Please, the person recording, when will you share it with us?
I have recorded, but I didn't join early, so I'm sure others started before I joined. The day will be better. But if you don't mind, I can share what I have. Just some part of it. Not
Yeah, I always have problem with those who record. It doesn't come.
What about the guy who requested they should make him a co-host so that he can continue the recording?
As soon as we finish, I'll share it with Ray, and Ray will put it on the platform.
Oh, okay, that's fine.
All right, so I'm back. I hope we're all back and then seated up. All right. So we setting out to do the last thing, and then we close and go and sleep. For those of us who go to Sandbox, today is Saturday. You can go early enough. Okay. So we are doing cash budget. Okay. The cash budget has two key compositions: receipts. Let me show my currency signs. And then payment. Receipt and payment. So these are the key composition of my cash budget. Okay. Then for me, because I'm doing a segregation of the two customers, I'm looking at my cash customers first. All right. Sorry, I got an interruption. So I would have my cash customers reported first here. So receipt from cash customers. So I'm going to report here. Yes. All right. So I'm going to report there. There was still some feedback. All right. The 10%, which is this, I'm reporting all of them down here. Then again, I report the receipt from credit customers. And that would also be equal to these figures. Okay. So I can compute my total receipts. My total receipts. So my total receipts. Call it TR. My total receipts will just be additions of the two. So if I had done it like the way Ima was saying, I don't know, I couldn't get the person right. It would just be these figures that would have shown up here. Right. So these are my total receipts. If there are any other receipts, you bring it down here. If there are any other receipts, you bring it down here. But this one, we have just two receipts items. So that becomes the case. Okay. Then I bring here my payment. My payment. At least for me, I remember we made payments to suppliers. So payment to suppliers. And that I would fetch this from the schedule of payment to suppliers, which is this. So I'm just going to rewrite these figures. Okay, I'll just rewrite these figures. We made payment to labor, which was classified as wages, right? So wages comes here. Wages. It comes here. But there's a policy to pay, or yeah, there's a policy to pay wages. Who remembers the policy? It says that wages will be paid as they are incurred in production. So wages are paid for as they are incurred. Meanwhile, overhead is paid a month later. So that's it. We are not going to get back to this sheet again. Okay. So wages is paid as they are incurred. So whichever amount that you incurred in April on labor, you paid for it. So we go back to production budget, and then we are paying for these figures as we give to labor. Okay, so I'm going to pay for it as they are. Okay. Then the last payment bit is overhead. Production overhead. Okay. We are guided that overheads includes an allocation of depreciation. So before we report overhead in the cash budget, we have to take away depreciation anyways. So we go back to our production budget. This is our overhead cost. We have to take away depreciation before we report it in the cash budget, right? But we are also careful with a policy that says that overhead costs are paid for a month later, suggesting that after you have taken out depreciation for April, from overhead for April, we have to put the resultant, or we have to pay for the resultant in May. Okay, so this one that I'm doing, it's not part of the workings. I mean, the marker will not mark. Maybe you may want to do this. I would want to generate the final overhead costs. So I am just generating it. So final overhead costs. Final overhead cost. The final overhead cost is just a simple formula or a simple function of your overhead cost computed in the production budget minus depreciation. All right. I hope this is going to guide you enough. So if I come here, my final overhead cost will be this minus all my depreciation for the respective periods. All right. So this is my final overhead cost for period 1, which is April. But this figure will be paid for in May. This figure is paid for in May. This is paid for in June. This is paid for in July. This is paid for in August. This is paid for in September. September's final overhead cost is paid for in October. Okay, so let me report this. I would always want to. So here is 0. You come here, it will be the overhead cost minus depreciation for the first period. Minus depreciation. Okay, so that is it. From here, after reporting my overhead cost, what I would have to do is to check if I'm able to get my total payments. So my total payments will be all the payments that I've done so far. So if there has been any other payment other than just these 3, then you may have to bring it to the cash budget under the payment side, right? But as it stands now, the only payments that we've done per the question are just these 3. So our total payment becomes total payment. So TP, let's call it TP, total payment. It becomes a sum of suppliers for month 1, wages for month 1, overhead for month 1. We add everything to generate as this. Okay, then I'm going to do same for May, same for June, same for up to September. Okay. From here, we want to check whether we're able to get a surplus of the cash.
Isaac, before we go to the surplus,
Okay.
the overhead payments, is it a general principle that we post it in the following month, or you got it from the question?
We got it from the question. We got it from the question. Should I bring back the question?
That would be helpful.
Okay. I wish I could pick up on other questions, but I don't know why my question here is not showing. Sorry. I think I'm tired. All right, so this is it. Wages will be paid for as they are incurred, whilst production overhead costs, overhead incurred, are paid for a month later.
Okay. All right, thank you.
Welcome. If I go down, the other questions don't show. Okay, so I think there's a question here. You may want to have a look at it. Oh, okay, this one too, the same thing. Wages will be paid for as they are incurred, whilst overhead costs are paid a month later. I was saying something about suppliers. Suppliers allow for a month credit for 50% of each month purchase. Someone asked a question and I said, sometimes the question would even just go straight forward and they won't tell you whatever is left. This is it. Suppliers allow for 50% credit for each month's purchase. So you have to think through and know that there was a certain remainder. And then when is the remainder paid? That is here. That is here. Okay. There are more questions in the question bank that I sent you. You can have a look at them. Yeah. Okay. So we're still trying to get deficits or surplus. So our deficit and surplus would either be when you have your total receipts minus total payment, right? Total receipt minus total payment. I hope you get this. You put your total receipts and then your total payment to test. Let me just highlight it so that it will look just like the top here. Okay. So total receipts for April minus the total payment for April. Then we're going to get something like this. Ooh, a deficit. That's wonderful. Okay. Then total receipts for May as against total payment for May, another deficit. Ooh. Total receipt of June against total payment for June. Hooray, some surplus is chopped. Total receipts of July as against total payment of July. Another surplus is chopped. Total receipt of August minus the total payment of August. Another. Then total receipt of September as against that of total payment of September. In that order. Then the total is, as we can see here. Today, this is what we set out to do. Do we understand this or we don't understand it? Or it is too complicated?
It's okay, just that it needs constant revision.
The 2% makes it complicated.
The 2%.
It's okay. Just that, I mean, it's a lot of things if you can't figure it out.
Okay. This is supposed to be the end of the cash budget, but wait, we've not ended it yet. So, you see, you are getting deficits and then you are getting some surpluses. So, should you intend to finance the deficits? How are you able to do that? It's a question that they can ask you. suggest ways that the firm can uh, uh, finance the deficits, and then ways that the firm can invest the surpluses or utilize the surpluses. It's a whole question on its own for 5 marks. Who can answer this? In which ways would a firm be able to finance the deficit? Amajua says that she now understands why accounting students would have to turn their books sometimes, and then even write in the margin. Yes, in this exam too, you can when it gets to budgeting, you can turn your answer booklet. Maybe when I see you face to face, I'll show you. You can also, because this is 6 months in a total, you can also pick out 2 pages together. So if you open to the second page of your answer booklet, you can use page 2 and page 3 at the same time to do a budgeting question. So you do 3 months here, then 3 months there, right? Maybe for a sales budget, because it's too long. But there are some people who write small, like myself, and then even just 1 page is enough for this, right? Others would also want to just turn the book, just like Mami Ajua is saying, and then still be able to work out some stuff down there. All right. The way my voice has become, I can only appreciate if we're what was the name?
Edionum. If we're Santua Edionum.
No. If we're Santua Edionum. Yeah. Okay, but there's a question on the floor. No one is answering. And then we are closing. How do we finance the deficit? How do we utilize the surpluses? That's the question on the floor.
Okay,
For
let me
deficit,
try.
you can go for loans. The surplus you can drop.
You can chop the surplus. This is an exam question. So if you write chop, they will answer you down. They will mark you down.
Let me try in lay terms. So the deficit, you can finance it with loans, as he said, or shareholders' equity.
Okay.
And then the surplus you can invest in short-term something to get some profits.
Okay. But you
Hello.
Hi.
With your surplus, you can plow back.
You can plow back your profit also, your surpluses also. But do you remember he did something with you on the working capital policies and said that one is moderate, one is aggressive, one is conservative. No, you don't remember.
No, I don't remember.
Oh, okay. Oh, I did it with you. So at the time, I mentioned that if it's about moderate, then you are going to match the maturity of the asset with the loan that you are picking or the facility that you are picking. If it's about aggressive, you take short-term investment, you take short-term finance to undertake other investment, which would take a long time to generate maybe the return. So you can take an overdraft to buy inventories and sell.
Oh,
It has been a very bad
we
and
lost.
disturbing day. I keep on getting calls. If I get a call, then the thing will go.
Oh, okay.
Sorry.
That's
Yeah.
okay.
So there are policies. I mean, there are ways for you to finance some of these things. It's either you go by the aggressive approach. This is just 2 months. 2 months that you are incurring this deficit. If you look at yourself and then your investment or your surpluses can cover this deficit, you go and pick out a short-term loan rather than picking a long-term loan, right? So you don't end up paying so much interest. You pick a short-term loan. You can even borrow from a friend. If you are going by the conservative approach, then you will just pick up your phone and call the owners of the firm to contribute more, right? Which is not really the best way to go sometimes. Sometimes you may have to take risk by picking someone's relaxed money to work for more money, then pay him just a small interest. Yeah. Yes, for the surpluses, plowing back would be good, would be ideal. Sometimes you just plow back to do the same business. If you want to ride for more points, then you say, oh, you can also plow back to expand your operation. You open more outlets to do more things. Yes, you can put the money down in a checking account. You can buy a short-term security or a short-term investment. So if you want to write down for more points, can you go and buy bond in the current market with your short-term, with your surpluses? Can you go and buy bond?
Not in this current economy.
Ideally, not in this current economy. So I'm just trying to indicate that the points that you are writing should also make meaning to the situation or the market in which you're operating, right? The market in which you're operating. So if it's a board meeting and you are making suggestions of sort, then you shouldn't be in haste to talk about some certain things that will not fit the market which you're operating within. Anyways, maybe I have to let you go. But there was something that I would have done with the balances here. I would have just said that we may have to add opening cash balance. I won't do it. I know you are tired. You have to go and rest. We'd have to add opening cash balance. Since the business has been in operation for March, there's supposed to be a certain opening cash balance here. But because you don't do, it's a zero, right? If you add your opening cash balance to whatever balance that you have here, it becomes your closing cash balance. Your closing cash balance of a certain period becomes your opening cash balance for the next period. So there Isaac ends. Isaac, don't do this to confuse us. Yes, I've stopped. Bye-bye. See you another time.
Please, are you going to share the spreadsheet with us, please, so that at least it has the computation? It'll be easier for reference.
Oh, okay.
Via email.
For this Excel, if I share, you would rather confuse yourself. But I can rather.
Oh, it will not confuse us.
It will be easier.
Isaac will follow. It will be easy.
It will be easier for us.
Oh, okay.
Take a screenshot of it and send it to us.
No. You should send
we need
via
the
email.
Excel.
Yeah, we need the Excel itself.
Yeah, sure. Say what the mobile bebre me.
It won't.
The Excel has a lot of.
Email. Oh, I just put my email. I'll share it with everyone. Please send it to me.
The Excel has a lot of formulas.
Yes, a lot of different formulas.
But because we did together with you, we'll be fine.
Yes.
Oh, okay. Media Matthew, but I'm sending a Word document to you first, and then we'll save the Excel spreadsheet to also get it to you later.
Oh, later.
Yeah, I would have to get it to you later. The later doesn't sound better.
Say, if you are go through
Better later than none.
The issue is that, okay, so I have to go off that screen and then be able to save it. I have not saved it yet. If I go off the screen, then I can save and get back. Okay. But I understand there are some people who are supposed to see me. So if you have to see me, you have to see me early enough, right? Before it's too late.
It's true.
Say again?
10 paper.
Oh. So everything. At the moment we are talking about classes fee. 10 paper is your own arrangement. Right. So yeah, so if you can see me for your 10 paper also. It's there. Me, I'm done. Okay, so I'm sharing the Word document with you now in the chat room. Let me save the other one. But interestingly, this one has it has the one that we did with Cortes. So for those of you who need a solution to that too, I think you can just get it. The new trend limited question. So I think I have to save this well, rename this as boost of check.
Players, both Manchester City and Sheffield United are ready and waiting in the tunnel for this final match of 2023. Sheffield United know they desperately need to start thinking of the points in their race away from relegation, but they are doing it today against the reigning champions Manchester City, who will be fourth in the Premier League table. They are hoping to return back to winning way on home soil this afternoon.
Please, are you able to download the Word document?
Is it in the chat box, please?
Yes.
I am unable to download.
Yes, I'll be able to download.
Okay.
Thank you.
So others are
Don't go
able
off.
to, others are not. Okay, I've
Yeah.
just sent
But
the
you're going to
spreadsheet
send
for
the
today.
Excel. Okay, sure.
It's there now.
Okay.
All right, see you when I see you.
Oh,
Please
Isaac.
hold
So
on.
Isaac,
Yeah.
please are we done with the cash budget? I thought we were doing the opening and the closing balances.
Oh, I'll do that with you in a different question.
Okay.
In this very question, it wasn't a requirement, but in the next set of questions that I'll do with you, which is here, let me see if I can show you.
When next are we meeting?
Oh, when next are we meeting? We've not gone on vacation, so so we will meet again in next week. Right. So next week is going to be our next meeting.
Yes, please.
We do a face to face, or school is not resumed, so we continue with this.
Online. Online is good. You can play
Online
back
is
and
good.
record and all that, and prepare for
Okay.
it.
Yeah.
Other people will join.
Okay, that's fine. So this is the question that I'm talking about. This is also a budgeting question. A very simple question.
Have you dropped
But
it? Okay.
no, it's on the screen.
Okay. I'm sure it's in the past question.
Yeah, it's in the past question. J-Lots Company Limited has an opening cash balance of this in October, and it's required to prepare a cash budget. Simple requirement. You have to prepare cash budget for October, November, December, having regards to this data. Wages and salaries are paid in the month they are incurred. Credit sales are settled as follows: 60% in the month of sale, 30% in the next month, and the remaining. So pay attention to this policy. Is Emmanuel here? Percy, are you also here? Pay attention to this policy.
Yeah, I'm here.
Credit sales are to be settled as follows: 60% in the month of sale, 30% in the next month, and 8% in the month following. What are they trying to say? So 60 plus 30 is what? Is 90. Plus 8 is what?
98.
98. So where's the 2%?
Bad debt.
Bad debt. But you see, it's a little different. This bad debt is different from the one that we did.
Yeah.
This is also bad debt, but it's different from how we did the first one. So the bad debt could come in either ways, but you have to pay attention to at what point in time must I apply the bad debt. Creditors give 1 month credit. Overhead are paid 1 month in arrears and include 6 million depreciation. So simple question. Let's close. Other than that, I'll bore you so much.
Gobi. Trust God. This one too shall pass.
But in this class, we have to kill it with the financial statement analysis. You have to do.
Yeah, we are not done with the two other.
Yes, you hold one class that would answer questions in financial analysis.
Yeah. And I think last week Patera raised a question with you on I think one of the bank reconciliation. They rather give the bank statement balance, not the cash balance. So you said you look at that one too.
Yeah, okay. I sent a list of questions on your platform. Then my expectations are that you're going to have a look at them, but I don't know. whether
Any
you
special areas to look
So
at for
do we have
exams?
to increase the meeting days or something?
Oh no. We're going to finish you. But if in my mind, I think we've effectively tackled each and every other area that's supposed to come in the exam. Right.
Yeah. Yeah.
So at this very time, if you pick an ENDA past question, you should be able to see that, oh, I can answer this question a little. I can answer this a little. I can answer this a little. So as you go through the preparatory classes, then we know that, oh, okay, I can answer this in full. I can answer this in full. I can do this in full. All right. So that will be the case. We will finish. We have the whole of January to learn. 4 meetings in January. What can't we do? If we tend to do it online, then it means I could even do, yes, you don't worry, you will do it.
Okay. Thank you.
All right. Enjoy the rest of your day. But let me know if I owe you. If I owe you, let me know. If you also owe me, let me know.
Okay.
If I owe you your work, let me know.
Please,
if you owe me the recording there, I don't owe you recording. I think Albert was sending it. But let's see if I'm able to also get mine. If I'm able to retrieve mine, I'll get it to you.
Okay.
So Albert, we are counting on you for recording.
Yeah. Okay. So when along the line, my network went off, and I had to re-record it again.
That's
so. I don't know if I'll get a full version.
What a posh.
So the full version will be with Posh, and then myself.
Okay.
Oh God, we're tired.
Posh, the way you've not spoken in this class today, yo.
Bye-bye.
Okay, bye.
Bye, Isaac.
Bye, sir.
Thank you.
Thank you so much. We're grateful.
Isaac, thanks.
Happy New Year in advance.
Expect my call.
Thank you.
Okay, sir.
Happy New Year.
Thank you and Happy New Year. Thank you so much.
Thank you.
Uncle Fred, Mr. Koa.
Expect my call.
All right, Mr. Koa, let's talk. Let's talk. If we can talk this evening, it's fine.
Expect my call.
So some of the calls will be in waiting, but I'll call all the calls that I missed. I'll call them back. Okay.
This is Prosper Isaac.
Okay, Uncle Prosper. Yeah. You see, the arrangement. You see, you spoke about a certain arrangement. You and I.
Hey. All right, we'll talk.
It's still recording. It's still recording.